All right, what's going on, everybody? Happy Friday. It's April 22nd, 9:15 a.m. my time. We got prices of Bitcoin currently at 40,200 and some change. Yesterday was a very volatile day. I think simply because the US equity markets created a lot of pressure on the crypto markets, as you could see, right? I believe that the sell-off that we saw in crypto was most definitely equities driven. But nonetheless, I think one thing that's been abundantly clear over the last few months, which I've talked about in my videos, if you actually go to thealphatrades.com here and you go to our YouTube channel, Alpha Trades, right? I did this video a few days back talking about trading the crypto correlations. And the crypto correlations mention how exactly our crypto markets are guided by the external forces of the US equity markets, as well as macro pieces such as the dollar, such as the 10-year T-note right here, which all in all have been creating a downward pressure in crypto. All this you can watch in this YouTube video if you want more detail. But the simplest chart is this: Bitcoin's tight correlation with the NASDAQ 100. This chart is all you need to know of a day-to-day picture of when you start watching the stock market here, exactly what you would need to look out for in terms of signs of reversal, signs of short-term pain, signs of direction, signs of turnaround, etc. Whether it's the ES, which is the S&P 500 futures contract, or whether it's the NASDAQ futures, which is NQ right here, okay? Either one of these charts, let me open this up here. Either one of these charts will give you a good indication of how the crypto markets are going to fare on a day-to-day basis. And one thing that's been really, really clear for the stock market is the stock market has been also quite rangy, right? Especially over the last few months, like you could kind of draw out this big range, maybe even a declining, head and shoulders pattern, this sort of W bottom that might be getting created. Either way, it has not done a whole lot basically since the end of last year. And this is very similar to what's happened in BTC since the end of last year. Here was the 2021 top, end of November. And since then, we've had a decline. And then since then, at the beginning of the year, we've just been going sideways, but slowly grinding up. Now, this is where the crux of the problem is. And this is where I'm going to discuss my bias, my thoughts on the market. I'll also introduce some top-down data, some other things from on-chain data activity that I like to pay attention to, as well as some other tips and tricks that you should be looking out for. So first, what I want to talk about is, if you actually look at the past few months for BTC, we've put in consistent higher lows. Okay, that's a very good sign. Also, if you look at this previous high, right, or rather a lower high, which sold us off down here, we cleared that lower high with a higher high, broke down. Again, we came up, put in a new higher high. So this, in definition, even though it doesn't look like it, this is actually an uptrend. Okay, this is a local uptrend right here because you have consistent higher lows, right? First low, higher low, now another higher low. Then you had your previous lower highs right here, right? These are all your lower highs, lower high, lower high, lower high, and lower high. But after this lower high, you put in your first higher high and then your second higher high. That is by definition a uptrend. So where we are right now is in a brutal ranging pattern, which looks like, kind of like death every single day. It looks like we're going to break down straight towards 30,000. Or go towards 20, right? I understand that. I understand the fear. Trust me, I understand it the most because I'm actually long in the market. Some of you may not be, and you may not have been for the last few weeks, but I am. And I'll tell you now why exactly I am. First, we got to open up with the US investor sentiment percentage bullish chart. This is a chart that shows in the US equity markets how many people are bullish. It's basically your sentiment read. Whether you watch CNBC or wherever you get your news from Bloomberg, right? Bloomberg, Twitter, any of the other news outlets that give you business news. Okay. The stock market has been getting hammered the last few months, and the sentiment is just abundantly crushed. And this is reflected by this chart right here. US investor sentiment percentage bullish. Percentage bullish right now, as of basically today or yesterday, is around 18.87%. That's very, very low compared to the high in July 2021, which is 48%. October 2021, which is 47%. November 2021, which is 48%. So this is a very, very low, beaten up sentiment. Compare this to, right, US sentiment, 18.87% now compared to the 15.84% last week. Again, very bearish, right? And 53% compared to last year. And also, this is lower than the long-term average, which is generally around 37.88%. So in terms of just a basic mean reversion of sentiment, we are crushed to the downside. Okay. Now, sentiment isn't everything, because sentiment should be taken in context of all things that are happening externally in markets too. Well, here's what I see that's happened externally in markets. We had massive inflation. We had a Russia-Ukraine war. We had Fed interest rate hikes, right? Multiple hikes so far, and probably another one to come here in May. We've had quantitative tightening, which was the Fed basically saying that, hey, we're probably not going to go out into the market and buy any more bonds or bond ETFs, et cetera. All in all, where has that left crypto or US equity markets? Well, most indices are only down by 8 to 10%. Like, here's the index, S&P 500 index, right? This is pretty much where we are. We're down 10% from the highs. Okay, that's not that bad. That means that, yes, we can have a further devastating blow to the downside to have those indexes really, really correct. Okay. However, this is where I get into, the idea that I don't think that time is now. I think the time right now is that the market overall has gotten so beat up that I believe from here, the path to the upside will be the most painful for a lot of people, because this would imply most markets climbing that wall of worry. The wall of worry is nothing but sort of a metaphor in markets where almost everything looks like shit, and yet the market keeps climbing higher. And I believe we have not done that for a while. And I think the time is now, given this, how bad the sentiment is crushed, given how bad even individual stocks have been crushed. Look at big tech right now. Okay, this is Microsoft. Okay, Microsoft looks like it's about to just die, right? That's not a good sign. Google, same thing. These are big tech heavy stocks. Google does not look good, right? AMD, one of the top tier semiconductor stocks. Again, not a good look. Nvidia, top tier semiconductor stocks, not good. TSM, which is like the global foundry leader in semiconductors. Again, not a good looking stock. But all these not looking good right now at the bottom of how bad the environment looks, how bad sentiment is actually a sign where I believe that this presents the best risk to reward trade to the upside. Now, I could be very well wrong, right? It is much easier to be bearish right now. I understand that. But I believe that the market right now is not signaling to you that we have to break down and nuke right away. I think the market is signaling to you that if you want to get long in this market and look for more upside, this is probably a good area to start considering that. Okay, because the upside reward is so great, because almost everyone will try to question it. Almost everyone will question the market moving up. And that is exactly what you want, because you want pressure all the way up. You want everybody, as the market keeps going up, you want people shorting, selling, shorting, selling, shorting, selling, shorting, selling, right? And people will only get bullish once BTC or some assets in crypto or US equities start ripping up 10, 20, 30% from their current lows. That might be in a couple of weeks or maybe a month or two. That is exactly what you want, and that's exactly what I mean by climbing the wall of worry. Okay. Another piece of information that I like to look at, this is from Glassnode, is the short-term versus long-term holders. Okay, so you can look at this newsletter from Glassnode. This is their weekly on-chain, I think week 16, if I'm not mistaken. It's called Short-Term Pain and Long-Term Gain. Okay, all this newsletter that I want to sort of tell you about that presents in a good way is short-term holders versus long-term, and how exactly they're positioned, how exactly they've sold, who's bought, who's pretty much in a loss, who's in a profit still, etc. Okay, so you can see right here, almost everyone who purchased after the all-time high is a short-term holder. Okay, so that means they're talking about the 2021 all-time high in November. Okay, that's this one right up here, right? November 2021. So what it's saying is almost everyone who purchased after the all-time high is a short-term holder. This cohort is most likely to spend their coins in reaction to the market volatility. Almost everyone who purchased before the all-time high is a long-term holder. This cohort is least likely to spend their coins. Now it says the chart below, okay, short-term holders, very few remain between the 50 and 60K range, suggesting most quote unquote top buyers have likely capitulated. So the short-term holders have more than likely over the last few months sold their coins, whether it's here or down here or somewhere, even now. And that's actually a good sign. Okay. Now, long-term holders currently hold 15.2% of the coin supply at a loss as well. With coins held at an even price above 60K, these investors have weathered significant volatility, yet continue to hold. This supports the notion that these investors are a relatively price insensitive bunch and remain to be the least likely to exert sell side pressure. And the way Glassnode sort of gathers this data is they look at different addresses, different exchanges of how much pressure, how much exchange inflows that they've seen, and then they connect that to a basic graph of understanding short-term holders versus long-term. Again, I'm not a huge believer in on-chain data because it's evolved and changed so much, but this is a good data set because it is not predicting any bottoms or top. It is just simply showing you that the potential math of how short-term holders versus long-term holders operate historically. And this, in my opinion, is a very important data point, because if you go to the bottom, right, all it's saying is, have we capitulated yet? The notion of an investor capitulation is widely understood and talked about in markets, and they usually precipitate that as the end of the bear trend. Okay, so a great majority of investors who are currently holding coins purchased above 40K are long-term holders and have weathered significant volatility. They're price insensitive. Okay, the majority of short-term holders who have purchased all-time high, they've capitulated and redistributed their coins. Their sell side is largely exhausted, meaning now investors continue to see value between 35K and 42K, with accumulation trends remaining very constructive in this region. This is the final point that I wanted to mention, is in this particular area, as you're seeing these higher lows, right? The low being put in at 34, 35K, whatever this is, 33K, continuing these higher lows could be, in fact, a large accumulation range that we may only get to see pan out over the next few weeks. But we have to see this actually go up. Until then, it's all speculation, right? Nothing I say means anything. Nothing Glassnode says means anything, because the macro forces and the sellers can easily manipulate this chart and show us that we're going to start breaking down. And then any prediction that we had regarding upside is meaningless. Okay, but until that point, this to me continues to look like a very nice higher low accumulation movement, and I am long in the market. Again, if you want to know exactly how I'm trading in the market, you can go to thealphatrades.com, click on the products page right here, join our Advantage membership subscription, $97 per month. It gives you access to all these channels right here where I post videos and analysis, videos twice a day. We have a nice NFT section right here where we discuss Ethereum and Solana NFTs and Arbitrum and Near protocol NFTs. We discuss a ton about altcoins, altcoin analysis, altcoin trade setups, different ecosystems and what they're doing, farming and staking and lending opportunities, right? Stablecoin opportunities, and then of course, Bitcoin analysis and whatnot. Okay, but all this information you can get on our website, thealphatrades.com. Hit the products page right here, and you can sign up for our membership. And if you want to learn technicals, and if you don't understand any of the things that I'm saying, you can join the course right here. It's only $20. If you message me that you've picked up that course, I'll give you 7 days free access in our Advantage community. Okay. Our entire community resides on Discord. All our communication, all our information, everything is on here. Okay. I also post on Twitter quite a bit. I talk about all the different things I'm seeing on the market, but I rarely post, exact things I'm doing in the market. That is reserved for my paid members, because the paid members get to see exactly, how I go about trading the market on a day-to-day basis. That's literally what they pay for. They don't pay to copy me. They don't pay for financial advice, because that's not what I offer. They pay to hear my thoughts out loud. Okay. They pay for my analysis. So that's exactly where I am right now. So going back to the market. All right. Again, make sure y'all hit the thumbs up, join our community. All right. So let's get out of this. So we talked about investor percentage bullish data. Now I want to move on to global charts, right? So one thing that's interesting here about global charts is that if you look at open interest, so this open interest, global open interest, is all open interest in the market, meaning all futures contracts that are open for all coins. Okay. That is still relatively high. At some point, I do believe that this is going to come down. However, my thesis on the market is that the market over the next few weeks is going to look like this. This is where things get kind of interesting. So I believe near term that we're coming to a bottom, or we've bottomed right here. And what I'm thinking is from here, we need to start turning back around, okay, hopefully by the end of April, and start heading on up into May as well as June. And that will be the end of Q2. And by the end of Q2, if we make it up here or anywhere close to, previous all-time high, then I'm thinking that this is going to be a rough Q3 and Q4. Okay, you're going to have a distribution and then a further breakdown from the highs. And I think in this particular area in Q3 and Q4 is where I believe we're going to have that final capitulation in crypto. Okay, I don't believe we've had a capitulation in crypto yet. I don't even think we've had a massive capitulation in the stock market yet. I think that is yet to come. Okay, I think right now, definitely a lot of people are very bearish, aggressively either selling or short or, hedged. And markets rarely tend to go down when everybody's so fearful, so hedged, or so short. So this is sort of my thesis on the market. And I am playing that right now by, like I said, being long in the market. There are other signs in the market that kind of scare me still. For example, the 10-year climbing aggressively like this, the dollar climbing aggressively like this. Once again, I cover this stuff in my video, my YouTube video of correlations in the stock market as well as crypto. And the only thing you need to know is when the dollar goes up, the 10-year goes up, U.S. equities start to, grind down or, break down. And with U.S. equities, BTC and most of crypto starts to break down, right? You're probably wondering, oh, well, what does BTC have to do with other cryptos? Well, if you've been here long enough, right, you know very well that when Bitcoin breaks down, most altcoins break down as well. It's not that hard. It's not rocket science to understand. Okay. If you actually look at correlations right here on Crypto Watch, okay, you'll see that if you build out any correlation metrics with basically any altcoin, it'll look like this, meaning all the stuff that you see green compared to BTC right here, all this is saying is there are strong correlations to any and all these altcoins compared to BTC. So when Bitcoin goes up, these altcoins go up. When Bitcoin goes down, these altcoins go down. Furthermore, what's worse is that when Bitcoin goes down by 1-2%, some of these altcoins might go down by 3 or 4%. Okay, that is the bad thing about some of these, market conditions. So overall, I'm thinking that if we start seeing that breakout to the upside, some of the altcoins that I've picked up, good quality altcoins, right? And I'll tell you, some of the good quality altcoins that I follow. Near is one, AVAX is one. I think Luna is also definitely a good quality altcoin. Let me see here. Frac shares is another one. All right, so these altcoins that I'm paying attention to, they have good fundamental theses behind them. And I believe these are the ones that are going to outperform to the upside if and when they do break out. Okay. Now, all this, being said, we actually have to see continuation. Like I said before, anything that Glassnode data says, anything that I say, it is all predicated on the idea that we actually need to see markets start to, confirm that they're ready to push up. Until then, it looks like we're kind of in a downtrend. This looks like, I don't know, you can say this is a massive bear flag and this is going to break down and we're effed, right? But I don't believe that yet. Okay. Last but not least, I want to talk about all the staking and these coins that are coming up in the NFT space. I really want everybody to be careful in the market because I think that the market is becoming very greedy in that they're trying to figure out ways to basically have people not sell, right? And they will trap you into your position by having you stake your altcoins or, park them for 2 months, 3 months, 1 year, whatever. And I think this is where a lot of people get trapped and they lose a lot of their money. And Kobe did a very good analysis on ApeCoin and the death of staking in his Substack. Make sure y'all read it. I think it's a very pertinent piece to where we are in context of the market today, which is that there's a lot of greed, a lot of cash grabs in the NFT system that you need to be wary of and you need to be cautious of so as to not give up the gains that you made, whether in crypto, whether in the NFT space. And by the way, again, you can join our Advantage community and we have a whole NFT section where we discuss all this stuff, okay? So anyway, that's all I got. Talked about everything, related to markets, correlations, data. Last piece, which I wanted to show you all, actually, I forgot to mention this, again, one of the reasons why we can look at this area and say that maybe this is a bullish, hopefully a bullish bounce is that if you look back here, whenever you start seeing walls like this stack up, right, you can see big walls like this stack up. Typically, that's been the bottom for markets, right? Even to the upside, when you start seeing walls like this stack up above price like this, that's been the top of markets, okay? And as of right now, you can see very, very massive walls stacked up below. And this is on multiple exchanges. So this has been more and more apparent over the last few months. So I'm hoping in this particular area that we're going to start shifting up and away from this region. Let's hope for the best, okay? That's it. Y'all take care. Good luck, everybody. Make sure y'all hit the thumbs up if you like my content. If not, share it. If not, follow me on Twitter.